What is Bitcoin? Bitcoin is a decentralized digital currency that was created in 2009 by an individual or group using the pseudonym Satoshi Nakamoto. It is often referred to as a cryptocurrency because it relies on cryptographic techniques to secure transactions and control the creation of new units. Here are some key characteristics and concepts related to Bitcoin. First one, decentralization. Bitcoin operates on a decentralized network of computers, nodes, that collectively maintain a public ledger called the blockchain. This ledger records all Bitcoin transactions and it's accessible to anyone. The blockchain is a distributed and immutable ledger that records all Bitcoin transactions. It consists of blocks of data that are linked together in a chronological order, creating a secure and transparent history of all transactions. Digital and borderless. Bitcoin is purely digital and can be sent and received globally. It transcends geographical and political boundaries, making it accessible to anyone with an internet connection. Limited supply. There is a maximum supply of 21 million Bitcoins, making it a deflationary currency. This scarcity is coded into the Bitcoin protocol, with new Bitcoins being created through a process called mining. The Bitcoin mining is the process by which new Bitcoins are created and transactions are added to the blockchain. Miners use powerful computers to solve complex mathematical puzzles, and in return, they are rewarded with newly created Bitcoins and transactions fees. Ownership and wallets. To own and manage Bitcoin, you need a digital wallet. This wallet can be a software wallet on your computer or a hardware wallet, which is a physical device. Your wallet contains your private keys, which are crucial for accessing and controlling your Bitcoin. Pseudonymity. While Bitcoin transactions are recorded on the public ledger, they are not directly tied to individuals' identities. Instead, users are represented by alphanumeric addresses, offering a degree of privacy. However, it's important to note that these transactions can still be traced and analyzed. Volatility. Bitcoin price is highly volatile, meaning its value can fluctuate significantly over short periods. This has made it a subject of speculation as well as a store of value for some investors. The use cases. Bitcoin is used for a variety of purposes, including online purchases, investment, remittances, and as a means of transferring value across borders. Some people also view it as digital gold or a hedge against traditional financial systems. Bitcoin has had a significant impact on the world of finance and has sparked the development of thousands of other cryptocurrencies, collectively known as altcoins. It has also raised important questions and debates about the future of money and the role of central banks in the digital age. Please note that the cryptocurrency space is constantly evolving, and the information provided here is based on my knowledge as of October 2023. What are advantages of having Bitcoin? Bitcoin as digital cryptocurrency has gained popularity and recognition for several advantages it offers. Here are some of the key advantages of having Bitcoin. First, decentralization. Bitcoin operates on a decentralized network of computers, which means it is not controlled by any central authority, government, or institution. This decentralization can help protect it from government interference, censorship, and manipulation. Security. Bitcoin uses strong cryptographic techniques to secure transactions and control the creation of new units. This makes it highly secure and resistant to fraud and hacking when used properly. Ownership and control. Bitcoin allows users to have full control over their own funds. You are the sole owner of your Bitcoin and you can transact with it without the need for intermediaries. Accessibility. Bitcoin is accessible to anyone with an internet connection, making it a global and inclusive currency. You can send and receive Bitcoin from anywhere in the world at any time. Low transaction fees. Compared to traditional financial systems, Bitcoin transactions typically have lower fees, especially for cross-border transfers. This can make it a cost-effective option for international payments. The speed of transactions. Bitcoin transactions can be processed quickly, especially for small to medium-sized payments. However, during periods of high demand, transaction times may vary. Transparency. The Bitcoin blockchain is a public ledger and all transactions are recorded and can be verified by anyone. This transparency helps reduce fraud and builds trust in the system. Store of value. Some investors see Bitcoin as a store of value similar to digital gold. Its limited supply, only 21 million Bitcoin, will ever be created, and its history of increasing value over time have attracted investors looking to hedge against inflation and economic uncertainty. Innovative technology. Bitcoin is built on blockchain technology, which has broader application beyond digital currency. Its innovative features have inspired the development of numerous cryptocurrencies and blockchain projects. Financial inclusion. Bitcoin can provide financial services to people in regions with limited access to traditional banking infrastructure. It can be particularly empowering for the unbanked or underbanked population. Hedge against fiat currency devaluation. Bitcoin is often seen as a hedge against the devaluation of fiat currencies, especially in countries with unstable economies. People may turn to Bitcoin to protect their wealth from inflation. Ownership anonymity. While Bitcoin transactions are transparent, the ownership of Bitcoin addresses is pseudonymous, offering a level of privacy to users. However, it's not entirely anonymous, as blockchain analysis can sometimes link addresses to real-world identities. It's essential to note that Bitcoin also has its disadvantages and risks, such as price volatility, regulatory uncertainties, and the potential for loss if private keys are lost or stolen. As with any financial asset, it's crucial to research and understand Bitcoin truly before investing or using it. How we can have Bitcoin today? As of my last knowledge, there are several ways to acquire Bitcoin, and I'll outline the most common methods. Please note that the cryptocurrency market can be highly dynamic and new methods and regulation may have merged since then. Always exercise caution and do your own research when dealing with cryptocurrencies. First one, it's cryptocurrency exchanges. This is the most common way to acquire Bitcoin. You can create an account on a cryptocurrency exchange platform, verify your identity, and then purchase Bitcoin using fiat currency like dollars, euro, etc. Or other cryptocurrencies like Ethereum or gold, for example. Some popular exchanges include Coinbase, Binance, Kraken, Crypto.com, and Xportal. Down below, I let you my links with which you can register and have a big, fat, juicy bonus in all these platforms. The second option is peer-to-peer platforms. Peer-to-peer platforms like Local Bitcoin and Paxful allow you to buy Bitcoin directly from other individuals. You can find sellers willing to accept various payment methods, including cash, bank transfers, and even gift cards. The third way is through Bitcoin ATMs. Some areas have Bitcoin ATMs where you can insert cash and receive Bitcoin into your wallet. These machines are becoming more common in many countries. Another option is through Bitcoin mining. This method is less common for individuals due to the high computational power and energy requirements. Miners use powerful computers to validate and record transactions on the Bitcoin network, and in return are rewarded with newly created Bitcoins. Another option, you can earn Bitcoin by providing goods or services and accepting it as a form of payment. Some online platforms and employers offer Bitcoin as a salary or payment option. Bitcoin faucets. These are websites that give away tiny amounts of Bitcoin for free, typically in exchange for completing simple tasks such as solving CAPTCHAs. You can have Bitcoin also through gifts or donations. You can receive Bitcoin as a gift from friends or family or through online platforms where people donate or tip using cryptocurrencies. Another way is that some apps and websites offer Bitcoin as rewards for using their services, shopping, or completing specific tasks. Another way to have Bitcoin is through participating in initial coin offerings or token sales. Be cautious with this method as it carries high risk due to the speculative nature of many ICOs. The last one, but not the least, it's through staking and lending. Some platforms allow you to earn Bitcoin by staking your holdings or by lending them to the others. Always remember to prioritize security when dealing with Bitcoin. Use secure wallets to store your Bitcoin, enable two-factor authentication, and be aware of potential scams and phishing attempts. It's also essential to be aware of the legal and tax implication of buying and holding Bitcoin in your country. Cryptocurrency regulations vary widely from one jurisdiction to another. Now that you know all about this blockchain technology, let me know down in the comments what are your thoughts on Bitcoin. If you like this video, share it with your friends, subscribe and smash the bell button and get notified about all the updates of this channel. Thank you for watching this video and see you in the next one.